HMRC has had to deny accusations this week that it is deliberately providing poor phone service to drive taxpayers to use online help tools instead. My name is Jack Rivas and welcome back to this week's episode of Tax Tidbits, where a report by MPs revealed that nearly 44,000 callers were left cut off last year after waiting over an hour on the phone to HMRC with no warning or callback, as the system could not handle the demand. The report slammed HMRC's customer service, saying it's getting worse and needs serious improvements, while also pointing out issues like unpaid taxes, £5 billion of which was written off last tax year. MPs accused HMRC of letting its service standards slip on purpose, but HMRC boss Jim Hara called the claims unfair and said they have cut call wait times by 17 minutes since April. He added that most customers are happy using digital services which make it easier to manage taxes. This scrutiny comes amid increased demand for support ahead of the tax return deadline on the 31st of January. New HMRC regulations targeting online sellers could create complications for small-scale traders, accountants, and even HMRC itself. Starting from January this year, platforms like eBay and Vinted have to report sellers making over £1,740 in sales or more than 30 sales in a year to HMRC. This could result in many more sellers filing tax returns even when they have made little or no profit. Many of these sellers won't make a profit from selling old items or clearing out clutter, so there won't be any tax to pay. This makes the returns unnecessary and confusing for casual traders. Critics say this move may generate thousands of extra tax returns without bringing in much extra revenue and may waste HMRC's time chasing insignificant amounts of tax, diverting their resources from more significant tax evasion cases. HMRC have issued a couple of new notices for MTD for income tax this week, one of which clarifies that taxpayers with a turnover below the VAT threshold of £90,000 a year can use a Freeline accounts method. This would involve reporting an income figure and expense figure quarterly, without having to break down these costs into separate categories. However, landlords must separately categorise finance costs like mortgage interest. The second notice confirmed how jointly owned property will be handled under MTD. Joint owners must only record their share of income and expenses and can also apply the Freeline accounts rule if their income is below the VAT threshold. These landlords also have the option to only report their income quarterly and enter their expenses on a yearly basis. While these changes aim to make life easier, they could be confusing, especially for those who own a mix of joint and sole properties. UK government borrowing hit £17.8 billion in December, the highest figure for that month in 4 years, and £10.1 billion more than last year. This is due to increased spending on public services, benefits and debit interest, which outweighed even the increased tax revenue received. The borrowing figure was higher than expected, putting pressure on the Chancellor, whose plans are already facing issues with slow growth and rising borrowing costs. Economists think Reeves may need to cut public spending or raise taxes in March to stick to borrowing targets. The global economy is expected to grow by just 2.7% in 2025, the weakest growth rate since 2019, according to the World Bank. This slow growth, partly caused by concerns about the new US trade tariffs and high interest rates, is unlikely to improve living standards around the world. If US tariffs continue to rise, growth could slow even further, making it harder for countries to grow their economies and could slow down progress on reducing poverty and increasing job creation. Thank you so much for tuning into this week's episode of Tax Tidbits. Don't forget to give this video a thumbs up and hit the subscribe button to stay updated with all our videos. See you next time.